So in today's video, I want to share with you 5 things that profitable traders do that losing traders don't. But here's what I want to know. Leave a comment below and let me know your thoughts, right? What is the one thing that profitable traders do that losing traders don't? Leave a comment below and share your thoughts with me. So the first thing, right, is number 1. Profitable traders, they go all in. So what do I mean by going all in? So let me share with you a story. So as you know, back then, right, in university is where I got involved in forex trading. And when I graduated, I knew, right, that I wanted a career in trading. So most of you know that, I got a job in proprietary trading. But what I didn't share, or what you may not know, is that how I got a job in prop trading. So when I graduated, right, I spent, right, almost 6 months just to get an opportunity in proprietary trading, right? It is darn difficult from where I am, right, to get a job down there. So I was at the jobs portal, I was submitting my resume, and I wasn't getting response, right, for the first few months. Then I decided to, take things into my own hands, right? I started Googling for the local prop trading firms in my country. I find out what's their address. I go down to their office and personally handed my resume to them. And I think I handed to about 10 firms, and none of them replied me. Yeah. So that was a little bit depressing, right? But one fine day, right, I saw another job opening on the jobs portal. I quickly registered, right, and I had an interview. I got the job. I was like, whoo, finally, an interview. So the interview, I believe I pretty much aced that interview because I was offered the job on the spot. So it's like, so do you want a job? I say, yes. When can you start? I say, right now. Boom. The next thing you know, after the interview, I start working for the firm immediately. However, things, didn't start too well. So at that point in time, I was really anxious. I want to get a job. So any job in prop trading, I just said yes. And I realized that the job offer that I took was a firm that specialized in algo trading, right? They are looking for prop traders who specialize in algo trading. So let's call it firm A. And the thing about prop trading in Singapore is that it's a really small industry. The bosses of all these different companies, they pretty much know each other. And one of the cardinal rule that they have down here is that if you work for any of the prop trading firm here in Singapore, it's very hard to kind of move from one firm to the other because they don't want to do any poaching and stuff like that. So usually if you work for this particular firm, right, it's quite difficult to move on to another firm, right, in proprietary trading in Singapore, especially from where I came from. Okay, so this firm may specialize in algo trading, and a couple of weeks in, I realized that, man, this is not for me. Okay, I want to get out of it, right, because I was aware of this cardinal rule, and before I sink in any deeper, I want to quickly get out and join a firm that, trades the way that I want to trade, which is, price action, scalping, and stuff like that. So at this point in time, there is another firm, right, let's call it firm P, right, that focus on price action. They were hiring traders as well. I was still on the jobs portal hunting for it, and I realized there's an opening. I quickly signed up for it. I got an interview as well. And it's interesting, right, how sometimes when, things don't go your way, you really get nothing. When things really go your way, all these offers and interviews come in. So yeah, I got an interview at firm P, and I aced the interview as well. The only problem is, I told you that, I was already working with firm A, right, the algo trading firm, and they have this rule of, firms, right, cannot poach traders from other firms. And this was an issue. So I explained it to them, and they said, don't worry, Rayner, we will try to work it out. The boss from firm P, right, will talk to the bosses at firm A and see how things work out. So at that point in time, right, I was thinking, man, should I continue staying in firm A or leave? So I decided, it's better to leave, right? So I quickly cut off my ties with firm A, right, hoping that, I would increase my chance of getting a job at firm P. Okay, so this was, at that point in time, I thought that was the best thing to do, because the deeper I sink, right, the harder it will be to get out. So I quickly sort of cut my losses and get out of it. And at the point in time, right, firm P also kind of reassured me that, there's a good chance that, this should work out. So I left my job, right, and I remember it's around Chinese New Year. So, I waited for a week, a month, 2 months, 3 months, and, I keep following up with, this firm P, right, with the boss. Say, hey, what's going on? And, am I joining you guys, right? And they keep saying that, the bosses at firm A hasn't given me a reply yet. And that's where I kind of realized I got played out, right? I believe I got played out. Again, up to this day, I do not know what went on behind the scenes, but from what I was told, right, is that the bosses at firm A weren't too happy that I left. So they delayed, right, giving back a reply to the bosses at firm P that wanted to hire me. So at that point in time, right, the delay just kept getting longer and longer until a point where they just gave up and they didn't ask anymore. So I was, once again, jobless. So I was so close, right, to getting a job in prop trading, and then bam, I was jobless again. I'm out of the industry when I just barely stepped foot in it. And most traders at this point in time, right? How would they feel? They feel like, man, this industry is shady, man. It's unfair, right? The people, they are cheaters, they are liars, right? And trading doesn't work and stuff like that. All these excuses. But for me, I didn't care. I wanted my foot in the damn door. So what I did is that I was still continue, right, giving out resumes to firms physically. I was still at jobs portal hunting for prop trading jobs. I was refreshing every single damn day to make sure if there's a new opening, I'll be the first to sign up. And then the breakthrough came. Let's call it firm F. So why firm F? Because this firm, right, adopts a fuck it mentality, right? Alright, yes, I said the F word, right? But this firm really believes in this. They just, just fuck it. So as I've said, right, they have this cardinal rule where, traders cannot poach other traders. But this firm, they didn't care, right? They just want to do, business the way it is, right? Business means business. I don't care if this trader used to be for your firm or not. We are still going to, hire anyway. And the good thing is that apparently this firm F, right, didn't like the boss from firm A. So that was an added advantage to me. So I got an interview at firm F, the fuck it firm. They hired me, they got me in, and that's where I got through, right, my prop trading job, right? If you ask me, right, from the day I graduated to the day I got a job at firm F, it took me close to a year, right, of job hunting, getting my foot into the prop trading door, giving out resume, and this is what I mean by go all in. All right, there's no way, right, I could have gotten a job at firm F if I, just give up after the first attempt, right? There's no way I could have gotten a job at prop trading, right, if, after 1-2 months, no reply, I give up. There's no way I could have gotten into prop trading, right, if I listened to the voices that said, oh, man, Rayner, you should get a job, right, get a fixed paying job, yada, 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 right? So this is what I mean by, profitable traders, they go all in. When you want to master a craft, when you want to do something, you go all in. There will be obstacles along the way. Dude, I faced this huge obstacles that swallowed a year of my life. And this doesn't mean that the moment I got into prop trading, I got paid immediately. No. Firm F, they don't pay an allowance. It's all profit sharing from the start. So I don't have any allowance, right? And my income, right, for that whole period is really, really, I would say, minuscule. Okay? So this is what I mean by go all in. Number 2, question everything. So profitable traders, they question everything. So when I first got started in trading, right, so one of the key things I learned is support resistance. And I read from, books, courses, which says that, the more time support, for example, the more time support is tested, the stronger it became. And at first, right, I bought into that and I realized, that kind of makes sense. The more time it hits support, right, the price hits support, the stronger it became. But as I start to watch the markets, I realized that doesn't seem to be true, right? I realized that the more times support gets hit, right, the more obvious the level becomes, the higher chance that it will break. So that, based on my own experience, my own trading results, I realized that the more time support is being tested, especially within a short period of time, the greater the likelihood it'll break. So if you can't visualize what this means, right, let me just briefly, just draw this for you. So this is an area of support, right? Okay, price comes in, bounce up, comes back down, comes back here. So the more times, right, price tests support within a short period of time, right, this looks something like a descending triangle, the greater the odds, right, the price will break below it, because now there's a lot of a cluster of, sell stop orders from traders who are long. There's a good chance that the market will just, break through lower, triggering those cluster of stops. So usually when this happens, right, again, right, it's a sign of weakness and it's a sign that support is likely to break. So this is one example of, question everything, right? So if you don't question everything, you just take everything at face value, you realize that, you might be going down the wrong path. And that's not the only one. Second thing, market trends. So again, if you study, textbooks, right, internet, blog, everything, you'll see that people will say that the market tends to trend about 30% of the time. Okay, again, I bought into that. Okay, market trends about 30% of the time. But then recently, I've done my own back testing, and I realized that, okay, for the Forex market, not all currency pairs are the same. Some currency pairs tend to trend better, and some currency pairs, if you take a trend trading approach, right, you'll lose money. So let me share with you some of this data with you. I've not shared with anyone before, but just to explain what I mean. So for example, like this is you can see over here, right? This is the equity curve, right, of Aussie Canadian, right? So when you apply a trend trading strategy or breakout strategy on Aussie Canadian, you buy the highs and you short the lows. You can see that this strategy, right, loses money in the long run, right? You start off with 100K, right, and over the long run, about 11 years of backtesting, right, you notice that Aussie Canadian loses money. So this tells you that this currency pair tends to mean revert instead of trend. And if you look on the other hand, pound dollar, again, you apply the same technique, right? If you look at the daily candles, you look to long the highs, okay? And if the price hits the previous day low, you exit your long trade and go short. And you hold the short trade until the price hits the previous day high, you exit the short trade and you go long. If you do that, okay, you realize that pound dollar tends to make money in the long run. So this tells you that this pound dollar is a trending currency pair. So this is what I mean by, question everything, right? So just because, let me just get this out of the way. So just because someone says that the market tends to trend 30% of the time, right? It's very easy, right, to get, to accept it at face value. But when you do testing, you kind of realize, well, that's not really true. As I just shared with you, right? Aussie Canadian, it hardly trends. In fact, it trends less than 30% of the time. If you apply a trend trading strategy to Aussie Canadian, it tends to lose money. And we are talking about a daily time frame. And if you apply a trend trading strategy on pound dollar, it would tend to fare better. So second thing, right, is what profitable traders do is they question everything. Number 3, profitable traders, right, what they do is that they trade with an edge. So what is an edge? An edge is something that you do repeatedly over time that makes money. So for example, let's say, we've got a coin, okay, a coin, and every time you toss a coin, it gets hit. Let's say you make $2. Okay, $2. And every time it comes up tail, you lose $1. So clearly, this coin toss for you, right, it makes money for you in the long run because your coin toss, whatever coin that you're tossing with the odds that you have, it gives you an edge in that coin toss. And it's the same for trading, right? You must have an edge in the markets because imagine if you are on the opposite side of this coin toss. Every time it comes up hit, you lose $2. Every time it comes up tail, you make $1. You can imagine that in the long run, you're going to lose money. It doesn't matter whether you have the best risk management, you have the best psychology. You don't have an edge, period, right? You are going to lose money. And if you think about this casino business, their business works because they have an edge over the players. Every game, every slot machine, every card game in a casino, the player, right, they don't have an edge over the house. Yes, you can, level the playing field by, card counting and stuff like that. But generally, right, the casino has an edge over the players. And that's how casino make money. If you remove the casino's edge, they're going to go out of business. Guaranteed. Nothing's going to save them, right? The hot chicks, the drinks that they give, the martinis and stuff like that, those cost them money. But the reason why they're still in business is because they have an edge. It's the same for trading, right? If you don't have an edge, the best psychology, the best risk management, your risk-reward ratio, your trade management, it all doesn't matter. You're still going to lose money in the long run. So profitable traders, they trade with an edge. Next, profitable traders, they focus on the process, not the results. What do I mean by this? So let me just generally break down to you the process, right, that discretionary traders use, right, to find trading success. It's something what I call the DER method. So D over here stands for develop your trading strategy. Once you've developed a trading strategy, right, you then execute it, right? Execute the trades according to your trading strategy, your trading plan. Once you've execute your trades, right, you would record your trades, right? Where you enter, where you exit, right? The charts that of the setup that you took. Once you've recorded down, you will start to review your trades, right? So you have a sample size of 50, 100 trades. You tend to review your trades and find out what are certain patterns that lead to your winners, what are certain patterns that lead to your losers. Okay, so once you review, right, then you can iterate and work on it, right? You start focusing more on patterns that lead to winners and avoid those patterns that lead to your losers. So this generally is the process of how discretionary traders become profitable. This is the process. And the problem with most traders out there is they don't focus on the process. They focus on mainly the execution, the results. They focus on execution and they pray that it's going to be a winning trade. Please, Lord, let this be a winning trade. Please. The problem with just focusing on the execution, just focusing on the results is that you don't see the big picture. You don't see the process. And when you win money, or when you make money, or when you lose money, you don't even know why. Because you're not looking at the process. It's like kind of like bodybuilding, bodybuilding where they try to build muscles. It's like taking all the creatine, the supplement, and you're not working out in the gym, and you wonder, hey man, why isn't my biceps getting bigger? Why isn't my chest expanding? Well, because you're not focusing on the process. You're just focusing on the easy stuff, right? The supplements, the creatine, right? The multivitamins, right? But you're not looking at the process. And it's the same for trading, right? You have to focus on the process, not just the easy stuff, the exciting part, the execution, the entries. No. The process, my friend. And this is what profitable traders do. They focus on the process and not just the results. And finally, right, profitable traders, they let the market come to them. They don't chase the market, they let the market come to them. Big difference. Let me explain. So, for example, right, let's say the market breaks out. over here. And at this point in time, right, profitable traders, right, or winning traders, they would have already been in the trade. They wouldn't be looking at this chart and say, oh man, the market is breakout, it's so high, it's so bullish, look at the candle, it's so huge, time for me to buy. Well, at this point, if you do this, right, you're not letting the market come to you. Instead, you are chasing the markets. You're chasing the markets because, you know, it's so bullish right now, it's so high, it's exciting right now, and you buy over here. And the problem with buying over here is where are you going to put your stop loss? Well, most traders, they'll put their stop loss according to the risk amount they're willing to tolerate. You know, maybe $200, $300, I don't know. So they put their stop loss somewhere here, here, and here. Thereabout, within that range. And you know that the market, you know, when it breaks out, it tends to, you know, mean revert, do a pullback. And when it pull back, right, guess whose stop loss is going to get hit? Well, those traders who chase the market, right, oh, it's going to hit all their stop loss, all right? Market comes back into here, previous resistance that could behave as support, then it reverses up higher. And then traders, they got stopped out and they look at the market. Man, I knew this is going to happen, man. Well, if you knew this is going to happen, then you wouldn't be chasing the market in the first place, my friend, right? So yes, this is what I mean by don't chase the market. Let the markets come to you. So how do you do it, right? So for breakout, for example, if you miss the move, right, let the market come to you. Let it come to a market area, a structure, right, where you can enter and better time your entry, where you can set a reasonable stop loss. So let's say the market does pull back, you enter somewhere here. Where's a logical level to set your stops? Maybe you can set it somewhere here, right? Because if the market breaks down, right, then this previous resistance that acts as support, it's invalidated, and chances are the market, right, the breakout has failed, right? So this is a logical place to put your stop loss, or maybe even below this area of support. Up to you, right? But you get my point, right? Don't chase the market. Let the market come to you. Another example that I can share with you is trading at support. So you know the price, you know, it's in a range, right? And you tell yourself, oh, I know, I'm going to buy at support. But as you see the price leaving support, right, heading up higher, and you tell yourself, man, I missed the move, right? Price has already left support. But hey, there's a good chance it's going to come into this area of resistance over here. Let me buy over here. So again, right, you can see that instead of buying at support, chasing the market up higher, okay, hoping to get just this little bit of the move, right, while your risk, right, is now this portion over here. So can you see from a risk to reward standpoint, it doesn't really make sense anymore. Maybe the market could head up higher, or maybe it could just reverse and then, you know, stop you up for your trade. That's possible. But the point I'm trying to illustrate over here is let the market come to you. Because if you let the market come to you, you can plan better, you can execute better, and more importantly, right, you will have a much more tighter stop loss to say, right? Your stop loss, right, can just lean against the market structure. And in other words, right, a tighter stop loss offer you a better risk to reward on your trade. Okay, so this is what I want to share with you. Let the market come to you. So a quick recap, right? Profitable traders, number one, they go all in, right? I shared with you a story on how I got into prop trading. You have to go all in. There's no such thing as dabble, let me try, let me check it out. No, it's a must. When you do something, it's a must. I must succeed. There's no can, there's no will, there's no would, there's no could, there's no should. It's a must. Number two, question everything, right? As I mentioned, right? I shared with you a couple of things that I thought is according to what the textbook has shared, right? But I realized, no, that's not really true. Like, for example, more time support is tested within a short period of time, chances are it's going to break. Yes, market trends, but different markets, right, trends differently. Again, it's very important. Then we talk about trading with an edge. You need an edge in your trading, because without an edge, you're not going to make money. That's the truth, right? You need to have an edge. Number four, focus on the process, right? The process, I just break it down for you earlier, the DER method, right? Develop your trading strategy, execute, record, and review the entire process. That is it. Don't just focus on execution. Don't just focus on your entries. That's only one part of the equation. And finally, we talk about letting the market come to you instead of chasing the markets. Because if you let the market come to you, right, you can set a better stop loss. You can have a tighter stop loss, and you can put on a larger position size and still keep your risk constant. In the grand scheme of things, right, it basically improves your risk to reward on the trade. Okay? So with that said, right, if you've enjoyed this video, hit the thumbs up button and subscribe to my YouTube channel. The link is all below. And if you want to learn more, right, about my trading approach, right, if you want to learn what you can do to get an edge in the markets, my recommendation is go and learn price action. And I've got this ultimate guide to price action trading over here. Go to my website, tradingwithrayner.com. Click this orange button and I'll send this ultimate guide to price action trading to you for free. Okay, so with that said, I've come towards the end of this video. I wish you good luck and good trading, and until next time, talk to you soon.